Okay, I'm going to start everything over here. Thanks for letting me know, Josh, that the screen was not being streamed. So what I want to do today is a quick rundown from the higher time frames down to some of the more intermediate time frames, because we had the daily, the weekly, and the monthly candles all close on Friday. So I tried to pull up a yearly, but the yearly is not loading on NinjaTrader, and I don't know how to get it to work. It just sits here and loads. So the highest time frame that I could pull up was, I guess you could call the quarterly or the 3 month chart. And NinjaTrader only is giving me about 10, 11 years. I tried loading more, and it just does not load. So we're going to have to deal with what we have here. And so let me start over from the start. You can see that on the 3 month or the quarterly chart, the RVI has never been below 70 in the last at least, say, 7 years. Um, so very bullish, and you didn't really need the RVI to tell you that. You can see that, over the course of the last 11 years, we've just been on this huge uptrend. So I just want to point out that we did have a bit of a pullback somewhere in May of 2015, and you did get nice divergence on your 3 month chart here. And I'm sure as we dial down, we'll see the same thing. But then you did get, because we are in this uptrend, remember, when you have a bear divergence, it's really just telling you there's a little bit of exhaustion in this whole push up. So when we pulled back, we then got a nice continuation pattern off of this February, March, April of 2016 candle. And you can see right off these lows, we came up to make a higher low compared to this candle that started on November 2014. And then we got this really glaring divergence off that low. So we had really good indication there in that time period that we were going to continue pushing. Sure enough, it did. And then we had another pretty decent pullback. If you guys remember back to October 2018, we had a really big correction. And forgive me, I don't remember exactly what the catalyst was at the time. And someone could type it in the chat if they remember. But you can see that on this candle that was started forming in August of 2018, you were getting exhaustion off those highs. And then sure enough, when that next candle opened for the October-November area here, we then pulled back and had this huge correction. And when we made that low, looks like at the beginning of 2019, that's when we got another, we then got, well, I guess there was no continuation pattern in this data right here, but let me see here. When we look back to that last major low after we began pushing, that's where we got the continuation pattern off of. So pretty much the last major low on the RVI, the last major low on price, we then got another continuation pattern here that the S&P was going to continue pushing. And sure enough, from that low at the beginning of 2019, all the way up until the huge sell-off in when COVID happened in March of 2020, we had this really good push up, and this was what, 2270 to 3350. So over like over 1,000 points. So beautiful push off that low, and then you can see that in the just before the sell-off in forgive me on these dates, March of 2020 for COVID, we then got another exhaustion pattern off the highs. So back in February of 2020, you would have seen that we were beginning to get exhaustion on this quarterly chart here. And sure enough, when I would think it was like the second week of March, everything just the whole bottom fell out, and that's when we had the sell-off. So you were already having indications back at the end of 2019 and at the beginning of 2020 that there was going to be some type of correction before it actually happened. So that was really cool to see. And then now it looks like coming into where we are now currently in 2021, there's really, you can argue, I guess, that compared to the previous highs on RVI over here, we still have this bit of exhaustion in the market. But really, because we're on this huge time frame, I'd really prefer to be looking at the previous highs here. And there's no real sign of exhaustion just yet. So if this high on RVI, if I could exaggerate this just a little bit, if this high on RVI was down lower here, say around 78 or lower, I would be expecting some type of pullback looking at this quarterly chart, but I don't see it because you can see that price from these highs came up, and so did RVI, right? So outside of that, you can just look at the overall bullishness of this chart, including this huge tail here, this huge wick that we had after that sell-off. Remember, we sold off and we recovered. They called it that V recovery. It was really quick. And so we got this beautiful bullish wick here. And then even on this, I guess this is around the end of 2020, we again got this beautiful bullish wick on this candle. And now we're up here. Now this candle, I believe, is still in the works. So there's really nothing to be said because this candle still, we have to wait for it to close. So that's just a quick look at the highest time frame that I could actually pull up on my chart. And now I want to jump to the monthly. And so if we look back to the sell-offs I was talking about, you can see October of 2018. Now it's easier for me to pull up these dates because it's right there. We had the big sell-off here, but we have this indication coming into August and September of 2018 that there's exhaustion in the market here because of the RVI pattern that we were getting. And so we did sell off, but off the bottoms, you can actually make the case that because we pushed to a higher low on the next immediate candle, if you look at RVI here, and maybe I could pull this up, you can see that RVI actually pushed to make a lower low in comparison. So we did get divergence, but it didn't know until that next month in January of 2019. Now you can see it does continue to build up with these exhaustion patterns all the way until, what was this, July of 2019. And in July of 2019, we did get like a 200-point sell-off. So on the monthly, it was already telling you that you should look out for that. Now, when we got all the way up to the highs in February of 2020, just before the COVID sell-off, we then got, again, one of these patterns here where price pushed higher, but the RVI was actually pushing to make a lower high. So you already had an indication when this February candle closed, and you can see we pulled back in the February and closed down here, and then kind of pushed up a little bit before the sell-off in March. You already had this exhaustion pattern telling you the potential for a pullback, and then it just so happened that the news catalyst was the COVID shutdown. And I think there's a lot of seasoned market analysts that will tell you that typically the news follows what the chart is telling you. So you're going to see a sign on the chart of a pullback before, and it'll happen, and then they'll say because of the news, that's why the pullback happened. So I don't know, it's that whole chicken or the egg type thing. But at least we can see that we did get divergence And this is again a bearish exhaustion pattern off the highs of February of 2020, and then we got the sell-off. Again, you can see that when we made this higher low in April of 2020, we then made a lower low on the RVI. And I was telling David this last week that I prefer to see defined peaks. But when you have a candle right next to another candle, there's no way to have a defined push up, pull back, and then a push up to make a new high. So other than the case when candles are right next to each other, I want to see this defined peak to draw my divergences off of. Like for instance, I wouldn't want to use just this straight line going up to then use that as an argument for my divergence or something. The only case I would do that is when the two candles are literally right next to each other, and you can't have an individual defined peak like you can see on the ones that are spaced out. And so on all of these pullbacks and all of these recoveries here, or these continuations, we were getting divergence. And you can even see back that 200-point sell-off back in 2019, when we did finally make the low and make a new candle here, we had divergence again. So right now on the monthly, you can see that we don't have any signs of a pullback right now. We do have a bit of this bearish candle at the moment, but we don't have, like, for instance, we didn't push up here and then this one area pushed down like that. It's pushing up as expected. And so from a monthly perspective and from this 3-month perspective, I don't see any signs of a pullback just yet. But as we dial down on these time frames, we might see indications of something as far as a smaller pullback or something. So let's go ahead and take a look at the weekly here. And so the weekly, you can see, you guys remember, we had the sell-off off that high of 39.59.75 or whatever it was. And we did have, off the last defined peak on RVI here, this push up, and RVI came down to make a lower high. Now the thing is that we've already got the whole sell-off, right? So when this candle opened for February 26th, the week of February 26th, we could have expected a pullback, and that's exactly what happened that week. Now right now, you can see that we actually, because this weekly is officially closed now, we can now see that there is divergence off the low, or what would be considered a continuation pattern off the low on the weekly. That does not mean that this next candle that opens up on Monday, or Sunday, actually in about 40 minutes, is not going to continue down here, because this RVI pattern could very well continue in this downward fashion. But as it pushes down in this fashion, you can see that we've got divergence. So until we break the low this of the week of February 5th, we still have divergence that indicates we're going to continue up. So as long as we don't break 36.56.50, we have a continuation pattern here on the next candle that's going to open here in about 40 minutes. And so you take it for what it's worth. It's just something to, again, keep in mind, because you're not necessarily going to be trading that unless you want to put a trade on for 130 points of risk or more. Right? So if the next candle does open here for next week, and we stay above the low of that candle, and we actually start to retrace this here, then that's going to be a really good indication that we're going to continue. What else can I say? Also about the weekly, I think I skipped over on the monthly, so let me jump back. The monthly here, you can notice RVI has not broken 60 in over 10 years. So the quarterly, extremely bullish in terms of RVI range. The monthly, extremely bullish in terms of RVI range. And obviously, you can just look at the chart for that. And then the weekly, has not broken below the 60, except for those major sell-offs that I mentioned earlier back in like November 2019, October 2018. That big sell-off, I remember, that was one of the most volatile times that I was trading the market. At that time, I had never seen anything that volatile before. And sure enough, we pushed down to test that 40, that bullish zone. And then the big sell-off that we had for COVID, again, we did break the 60 and come down to this really bearish part of the RVI range. But then we popped right back up and haven't broken the 60 for about a year now, right? So now we could jump to the daily. Let me get rid of all this stuff on here. Again, I didn't really have anything prepared. I thought I would just come in and just start looking at everything with you guys here. So let's just see what's going on in terms of the daily here. The daily is not telling me much. You did have, again, from the previous candle, it pushed up, but then RVI pushed down. And then sure enough, we got the sell-off. But by the time that next candle opened, we already had sold off a majority of the price there. So right now, in terms of just looking at this with RVI, there's no bullish indication here. In fact, we could push all the way, unless RVI was to push all the way down like this and break the low over here. If I mark this low, if RVI does come down and break that low, but we do not break price here, then we'll have a continuation pattern. But at the moment, there's nothing. So from an RVI standpoint, we really can't do anything here. We had a potential bearish indication back on the 25th. And sure enough, we did have the big sell-off on the 25th. But there's nothing over here. Something I did point out, however, is that if you start looking at some of the other things that I look at, like for instance, if you throw a fib on this major leg here, we bounced directly off the 50% back on the 23rd, and now we're coming down to potentially maybe test the 61 or maybe 75 down here. But so far, nothing. You can see the body of Friday's candle did still hold the 50 here. But it's a pretty ambivalent candlestick here. You could argue it's slightly more bearish because you have a larger percentage of the wick on the up on a higher end here, but overall it's fairly ambivalent. So we're going to have to wait to see what happens in Globex here in terms of the range of this candle, the high and the low, to really get a better indication of that. When we jump down to the 4-hour or the 240 minute, go ahead and hide all this garbage. What we do have forming off that low, remember on the daily, I said it's a fairly ambivalent candle with no divergence signal. On the 4-hour, we actually do have the beginning of what could be a bullish divergence. So 4 hours before the close on Friday, you did have an indication of a push, but again, it's a 4-hour candle. It closed up here, so you only would have been able to capitalize on that and get about 25 more points in that push. Now you can see in this area here, lots of noise. You have a lot of these ambivalent candles with huge wicks on both sides. But I did point out on Friday's session, if you look at the range here of these wicks, and you look at the bottom and the high end, you can see that back in time here, we spent a lot of time chopping around in this area back between most of January. And then you got a little bit of it here at the beginning of February, just a lot of chop in this one specific region. And now we find ourselves again in this area. You know, I guess you could call this kind of an area of value in the market where it's, you could say the fairest price of doing business here around, say, 38.30, 38.40 area. So right now, coming into the Globex, you can see we do have a bit of bullish divergence off that low. But that does not mean that this next candle doesn't open and we're now down here. So don't just jump in on a long. We still have to wait and see what happens with the open here into Globex. Let me see on the flip side if we have anything. Nothing really clear. Yeah, so that's really all we have there on the 4-hour right now in this immediate area. And we jump down to the 60-minute now. Let's see what it's telling us here. So again, we have so much crap here that in a way it almost doesn't even matter what the signal is, because we have to get ourselves out of this zone. We got to get out of this chop zone for a really clear indication. And that's why on Thursday we had our live trading. And I said in the morning, I looked at it, I think I reviewed all the different time frames, and I didn't have anything to tell you. There was nothing to be said. And then Friday morning, there was nothing to be said either. So really on Friday morning, I think that's the recording we uploaded onto the course website. I said again, there's really nothing. All we have is the fact that we're in this range here and we're going to have to break higher or lower. Now, one thing that I did notice on Friday is that that night we had a push down, which came down, oh, wrong tool there. We pushed down here, but the RVI came up, and that's when we got that huge push right at midnight on the, what date is this? On the 26th. So on the morning before Friday, so Thursday night, there was a beautiful signal to go long off the low here around 3,800, and that signal was actually on a number of time frames. It was on at least the hourly. I believe it was on the 30. It was on the 10 minute. So a lot of indications here to take this long, and that ended up being one of the nicest pushes in this range, which was over just around 40 points or a little over 40 points. But then when we made that high, you can see from a 4-hour or a 1-hour perspective, it was then a bit of an exhaustion pattern, and then we got almost a complete sell-off back to test that low. And then again, right at, this must have been 8 a.m. Let me check the time on the 26th. So on Friday, you did get again, and this was on multiple time frames, the indication to take this long when we were selling off. The problem is it was really hard to take because we had this huge sell-off, and I even said because of that I expected 37.70, which if you look back, 37.70 are these previous highs in price that we never came back to test over here. Let me see if I can make this clearer. If you look over here, you have this resistance area that then became resistance again, and if you mark that on there and get rid of the range, that was a zone that we never came back to test. And it also happened to be, if you throw a fib on this, I think it ended up being close to 61. And yeah, so you had your 61 and the previous resistances. And so as we broke that low from the overnight on Friday, I expected to come down and test this, and we never did. So again, today we're still stuck in all of this chop with some fairly ambivalent signals. So although it being the close of the week, close of the month, outside of the weekly and the monthly showing us some things, on these somewhat shorter intermediary time frames, there's not that many indications, and we have to wait and see where they're going to take it outside, which direction they're going to take it outside of this range. So that's really what we have here. We have a 3-month that's showing that there's no real divergence off the highs. So no real exhaustion here so far. We have a monthly also really not showing much of exhaustion off the highs at all. Again, if we saw something where this pushed up, but then on here you could see the RVI come back a little bit, I would then say, well, there's an indication of a potential pullback coming into the month of March. but I don't see that so far. On the weekly, we did get a bit of divergence off the low. So that's now another bullish indication. So we have a 3-month that still looks fairly bullish, no exhaustion. We have a monthly looking fairly bullish with no exhaustion. Now we're getting pretty high on the range here, but we can still push all the way past 90 and it would still be fine. On the weekly, we had our exhaustion pattern, and now we're starting to get the buildup of potential bullishness. So overall, everything's looking pretty bullish on the higher time frames, including the ranges that we're in on RVI. We jump down to the daily. That's where we start to get a little bit of trouble, no clear signal at the moment. So the daily, no clear signal. The 4-hour told us to be bullish off the major low of Friday. But again, we're in this chop here. And because of the way this pattern is looking, there's nothing stopping this from continuing to now curl over. So we're going to have to watch on these shorter time frames in comparison to the daily and weekly and monthly. The 60-minute, again, nothing too clear at the moment. So pretty much from the 4-hour down, it's going to start to look ambivalent. From the daily and up, or at least from the weekly and up, we still look bullish. Let me pull the 30-minute down here and see what we're doing here. Again, I don't expect much because it's so choppy. It's too bad that the course is ending this week and we're ending it in this garbage. You know, if we were potentially in a trend or we're in an area where there was all these things lining up for a pullback, I could confidently tell you what's going to happen. But right now, because of all this, it's very tough. And you can even see that, let's see here. Okay, that high did not show up. But as we push lower here on the 30-minute, we're pushing higher here on RVI. So we do have that going for us, at least. So in a way, you could argue you have all of this exhaustion every time we try to push lower. So every time we push lower, we get more exhaustion in the market from a 30-minute perspective. So the other time frames are showing bullishness. The daily isn't showing much of anything at the moment. But then as you dial down to these shorter time frames, you start to get this buildup of exhaustion as we try to test lower. So again, you have to take it for what it's worth. It's something to keep in mind. That doesn't mean we just take this long right now. And then I'm just going to look at the 10 because anything lower is really not going to tell us anything. Those lower time frames are going to really help us as the Globex session starts to open here. And so on the 10-minute, you can see the huge sell-off. Definitely, when we closed this bar around 1250 on Friday, it was telling you to take that short when that next bar opened. So you had, within 2 points of risk, you could have entered here and with the expectation that we were going to sell off. And I actually remember the 3-minute was also showing bearish exhaustion and the 1-minute as well off this area. So really good indication at the end of Friday that we were going to have a huge sell-off. And we did. This was what? Over 40-50 point sell-off into the close. Now right now, there's really not much of anything. So that's really all I have. If anyone has any questions, definitely jump on. I hope this was a little bit informative for you guys on how I'm looking at things from a high time frame perspective, so that now this at the beginning of this week here, I can start to have an idea of where I think the market's going to go. But again, because of all of this chop here, the main thing we're going to want to look for is whether we can break below it or can break above it. And let's see a bit. You can also kind of see this exhaustion pattern as we push down. We were pushing up on the 10-minute, just like we did on the 30-minute. The 10-minute or the 60 minute, you can also see as we push lower, we're pushing higher. So with all things considered, you can actually look at this as a fairly bullish indication from the 3-month, the monthly, the weekly. Again, the weekly, assuming we hold and we don't break this low, still bullish. And so that's really all I have. Looks like in about 20 minutes it will open. And I would look again at that range to see if we're going to be able to break below it or break above it. And so I hope that helped, guys. Feel free to message me and feel free to throw some questions in the chat. It looks like Josh is going to ask something here. Okay, awesome, guys. I will see you on Tuesday for the final class, where we're going to wrap everything up and we're going to talk about some different trading strategies that we can do depending on what kind of trader you are, and depending if you like looking at short time frames versus higher time frames. If we had a really definitive case that we could build on, say, the 10-minute, the 30-minute, and the 4-hour and stuff, and it was really clear, I could tell you from a higher time frame perspective that we should look for a certain direction. But unfortunately, we just did not hit the jackpot here. If we were doing this back at mid-February, I might have had a better indication for direction. And then especially that 59.75 or whatever it was, that's where we got every single time frame lining up to tell us that we were going to have a market reversal from that point. Unfortunately, don't have that this week. So I'll catch you guys later. And well, it looks like Lander is maybe asking something. Okay, great. I'll see you guys on Tuesday.